We also have Subramaniam, the MD and Group Head of Equities, joining us on the show to talk to us about how the markets are panning out right now and what we should make of it. Hi, good to be speaking with you. Thanks so much for joining us, Mr. Subramaniam. I just wanted to begin by asking you your, the way you are looking at the markets right now with respect to the fact that we are at record high levels, 21,900. What should be the realistic expectation of how markets are likely to pan out this year?
I don't really make a year-on-year call, but given where we are, despite markets being at a high, we still think that given the earnings growth which is visible over the next 2 to 3 years, there is a lot of steam still left in the market. Having said that, there are also multiple risks, global and domestic issues, which can keep the market suppressed for some time. So we don't take a call either on a quarter or on a year-to-year basis, but given the long-term trajectory of the Indian economy, we still feel very positive on the way things will pan out in future.
But the question is, are valuations becoming a bit challenging, especially in the mid-cap space and the small-cap space? On one hand, you have the stocks that continue to rally, but if you look at the valuation picture, one gets a bit worried about the way these stocks have rallied. How are you, matching the two, growth versus valuation?
Yeah, valuations are a bit of a challenge in certain sectors, in the sense they have moved up very rapidly. But when we look at the overall database which we monitor a very close basis, we still find that the financial space, banking, insurance, the mutual fund, as well as some of the consumer discretionary names, the valuations are reasonable. Given the sell-off which took place in 2022 in the IT space, some of the IT stocks, given their long-term potential, they also look attractive. It's only in, say, the industrials and certain consumer staple stocks and certain consumer durable stocks where we find the valuations to be challenging. But there are still pockets where we think they are not cheap, but they are not expensive either, and one can continue to invest in those.
To hear, where's the value opportunity list, Mr. Subramaniam?
No, as I said, we like the banking space, we like the financials. Again, we need to do a bottom-up analysis, stock to stock, on a stock-to-stock basis, a lot of bottom-up research, and there, looking at the long-term potential of the Indian economy and therefore of some of these businesses, we find the valuations reasonably attractive. Again, as I said, I'm not saying that they are really cheap, but they are not expensive either. They are somewhere in between where one can still continue to invest.
TCS and Infosys yesterday, earnings have definitely gotten off to a flying start. As you can see, IT is the most charged up sector today. But wanted to understand your overall thoughts on the earnings and whether or not you think there is scope for a surprise and a positive one at that in Q3.
No, again, on a Q2, Q3, Q4 basis, I have no view. What we have always been saying is that demand for IT will be robust. There will be periods when it will go through a down cycle, as it did in the early 2000s, then in 2008, and very recently in the recent period. But IT spend cannot be perennially postponed. At the end of the day, you need cost efficiencies. You see a lot of changes happening in the software side, and you need certain service companies or people who implement these softwares. And companies like the names which you used and other IT companies in India, we think will continue to do well. Having said that, one can always take a relook at the capabilities of these companies, the execution capabilities of these companies, and then accordingly invest. But on a macro level, even if it is challenging, it's not something which these companies have not seen, or it is not something which we have not seen. You just need a little more patience to hold on to these stocks before they start delivering on the earnings expectations.
Point taken. So those are the, that's the way how you should look at the markets right now. But just because you're there at the CFA, Society India Conference, I just wanted to ask you in the sense of what were the key discussion points? What are people talking about? Is it about the private capex picking up? Is it the manufacturing push? What's gathering the largest amount of mind space there?
So it's been an interesting day so far. We have had a good session on private equity. We have had a session on macro economy. We had a very good session on performance evaluation and how do you evaluate performances. So overall, it covered a variety of topics. But of course, during lunch hours, etc., apart from what we heard, there were discussions about stocks and valuations and which sector looks good and which sector is worrying. And as you rightly said, certain sectors, because the valuations have gone up, there is some bit of worry. But overall, it has turned out to be a very positive learning experience for a lot of people who are attending this conference.
We are learning from the kind of, messages that we are getting from the speakers there. Thanks so much, Mrs. Subramaniam, for making time and speaking with us. Appreciate you joining us on the show.